Well, good afternoon, everyone, and welcome to our next session. My name is Kurt Sigstad. I'm the Chief Financial Officer here at CLE, and so this topic is near and dear to my heart. So welcome to the Financially Savvy Law Firm session being hosted by Jayden Doye. And I'll just give you a few words on Jayden's background, just so you have some context. We're super excited that he's here today to talk with all of us. Jayden Doye is also known as the law firm CPA. He uses his 10-plus years of accounting and business consulting experience to help firm owners across the country reach new heights and catch more flights. As president of Prestige Accounting and Consultant, Jayden loves to use specialized accounting strategies to help law firms, owners, increase their profits and pay less to the IRS. So I love that mission statement. Jayden Doye is a best-selling author and internationally acclaimed speaker. He is renowned for his trainings, which are deeply insightful and thought-provoking. His topics range from business development, client acquisition, hiring, profitability, and utilizing technology. He has held numerous workshops around the world on the value of connection, understanding, and collaboration in growing a business. He became a best-selling author in 2022 by Amazon, a distinction that speaks to his influence and impact as an author. With an extraordinary ability to connect with people on a profound level and an incomparable capacity to captivate audience with his words and thoughts, Jayden Doye's work has touched thousands of lives around the world. And with that, please join me in welcoming Jayden Doye to the stage. Thank you, Jayden.
All I do is win, 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 no matter what. Got money on my mind, I can never get enough. And every time I step up in the building, everybody hands go up. And they stay there, and they say yeah, and they stay there. Cause all I do is win, win, win. And if you going in, put your hands in the air, make 'em stay there.
Had to get the energy going. I know y'all had a late night last night. Some of you didn't have enough coffee today, and numbers aren't your favorite topic. So I want to get this started off right. But I have a question. Do you guys like this suit? You like it? Thank you. Here's the truth. Honestly, I actually could not fit this suit a year ago. And I was a part of a weight loss accountability group. And with that group, we had check-ins. Everybody was losing weight left and right. But I wasn't. And that's because I refused to use a scale. I said, I'm gonna go based off of how I feel, okay? Numbers don't matter to me. I just need to look a certain way. And I just got so discouraged because I wasn't getting the results that I wanted. Eating grilled chicken one day and cheesecake the next. And then I finally started to take things seriously, hired a fitness coach, and he forced me to get on the scale. And that is when I started to see results. With those weekly check-ins, having to get on the scale, look at those numbers that I dreaded, and also hold myself accountable and use data to really see if I'm making progress or not. Why am I telling you this story? Because a lot of law firms do the same thing with their finances, right? They're just working hard day and night, not looking at their numbers, not using a budget, and not projecting for future periods. And I want to change that. By a show of hands, how many of you actually put together an annual budget for your firm? Okay, about 25%. How many of you do a budget and stick to it and figure out where the variances are and make changes in your firm? Okay, about half of that. Well, this time next year, everybody's hand is going to be raised, okay? So, we're first going to go through why traditional budgets don't work. For some people, they pull numbers out of thin air, and it's simply wishful thinking. A real budget is a static document that you go through, that you look at monthly and quarterly. Another mistake that people make when budgeting is having the mindset that budgeting is all about cutting expenses. And that mindset holds people back. Have you ever heard the term, it takes money to make money? It's real. So when revenue comes in, we should have a strategy for how we're going to split that up. We should have a strategy for how much we're going to set aside for tax savings, profit savings, rainy day fund. So we're going to go through all of that with you today. And we're not going to, in the future, just use a budget as a checklist that we look at once a year. We're going to actually use that to make data-driven decisions in our firms going forward. There are some key components of a law firm budget. And the way this presentation is going to work is that you're going to take notes. And for those who stay at the end, I have a little freebie for you. Who likes freebies, right? So you'll get access to this presentation as well as a few worksheets for you to help you put together your budget. And I want you to attempt to put together your budget, and then after that attempt, work with your accountant to refine it, okay? So the first part of a budget is to forecast your revenue. Now, we're not guessing, we're not pulling money or data out of thin air. We're going to look at the last 2 to 3 years, okay? And we are going to account for seasonal trends. So PI firms, you already know it's about to be a great quarter for you because the insurance agencies are going to be cutting those checks, okay, because they want to get their money off the books, and December should be your best month. That might not be the case with some family law firms where your avatar tends to say, I'll wait till after the holidays, I'll wait till after Christmas, after Thanksgiving, and they wait until Valentine's Day when they find out that their spouse is with someone else. I want you to be conservative with these results. If over the last 3 years, you've only made $500,000 a year, unless you are going to do some crazy aggressive marketing campaign, you're not going to go from $500,000 to $3 million, okay? So I want you to plan for growth, but I want you to be conservative at the same time. How does CLE help with this? CLE helps you with providing you revenue dashboards. It'll show you what's been billed, collected, and outstanding in real time. They have a billing performance report, which helps you forecast with accuracy and not just assumptions. And you can even track income by practice area so you know which services are actually your breadwinners. After we have projected for revenue, we will then put into place our fixed expenses. These are the ones that are unavoidable, the non-negotiable. The cost of keeping your doors open month after month. So, guess what? It doesn't matter if you make money or not, your landlord wants their payments on the first of every month, okay? So that is a fixed expense. Things such as software, salaries, benefits, insurance premiums. This is important because this is your monthly baseline, and you don't make any type of profit until you've paid all of this out. CLEO's subscription dashboard can integrate with QuickBooks Online to help you with this process. You can track fixed expenses in all one place, and you can monitor things with the two programs. Then we're going to move over to variable expenses. These are the ones that can fluctuate. Expert witness fees, travel for client meetings, court cost filings, things of that nature. And my favorite, marketing. Now, don't just put a number here. Actually, look at the data behind it. And this is going to be based off of your revenue, right? So if you know that you need to make an additional, if we're planning for first quarter, and we know that we need to make an additional $250,000 in the first quarter, and our average client value is $25,000, how many new clients do we need? Who said 11? Okay. 10, yes, that's correct. So we have to have a strategy as to how we are going to get those 10 new clients. And within our budget, sometimes there's mini budgets, right? So with marketing, you might have marketing virtual assistants, you might have some service fees if you're working with an agency, your ad budget. Look at the different components, even your networking. Look at the different components of your marketing, see what works, see historically, where have you found the best clients? So if you haven't already, you know how when you go to a restaurant, they ask for a review and you give them 1 to 5 stars? We as consumers are always being asked to rate businesses, but we as business owners can rate our customers too. Now, of course, it's not client-facing, we keep it internal, but we create this model so that we can make data-driven decisions and find out who our best clients are, the ones that pay on time, the ones that respect us and value us, and the ones that communicate timely. So once you've established what those best clients are, you are doing the research to find where you found those clients. Were they based off of Google? Were they based off of Meta? Did you get them by ways of referrals? If so, who were the people that referred them to you? Those of the type of experience, the type of people that you need to nurture those relationships more, okay? And oftentimes there are costs to nurturing those relationships. I'll give you my secret. I love concerts, right? And so what I do is whenever I buy a ticket for a concert, I always buy at least 4 to 8 tickets. And I invite my top paying clients, referral partners, and potential clients. It's magic. And then they get to talking, and they've enjoyed the experience so much that it's easier to convert, and I'm staying top of mind for these people, so they remember, hey, I had such a good time last night, and actually, I have a client to send you. Now, I'm not telling you to take your potential clients and referral partners to Beyonce, but hey, I'm just letting you know it worked for me. Figure out what works for you. All right, so to recap, we have planned for revenue. We have written out our fixed expenses. So you're looking at your P&L for the last 2 years, you've picked out what your fixed expenses are, and you've put in your spreadsheet what those fixed expenses will be for the period that we're gonna budget for. Then we have established the variable expenses based off of the revenue we're projecting for. Have I lost anybody or are we good? Okay. Now, we are in business for what? No, to help people. Right? Yeah, and profit. So this is the non-negotiable. I like to plan for having a profit margin of 25 to 35%. And the reason why I like to do that is because this allows you to have a good amount of funds that you can strategically use at the end of the year. You know, at the end of the year when your CPA says you need to spend some money so that we can save on taxes, you have that fund so you can say, you know what, let me strategically put this money into things such as marketing or more staff or better software so that I can better serve my clients and reach more of my best clients. But if you don't have any profit, then you're unable to grow. And oftentimes what happens is I hear people say, oh, I just want to help the community. There's so many people that need me. And if I don't have a profit, I just feel good that I'm helping the community. That's all fine and dandy, but if you don't have a profit, that means you can't grow, and that means that you are hindering how many people you can serve. So I don't want to hear anyone say that you are all about serving the community if you're not creating a profitable business so that you can impact more of that community. Okay? Have I triggered a few people? If I do, I'm sorry. And one other thing, let's always have a growth mindset. Now, I'm not saying that you should plan to grow 1 million every year. However, we should always be planning for growth. What I like to suggest people to do is have a whiteboard. And on that whiteboard, you put down all the things that you want in your business, but you can't afford at this moment. And make sure that whiteboard is in a place that you can see every day. And eventually, as you start to grow that profit savings account, you'll be able to get there. How can CLEO help you do this? CLEO utilization report shows whether your team is at capacity or not. So when people are saying they're at capacity and you think in your minds, are you really at capacity? Before you hire, look at your labor percentage and also look at your utilization report to see if you're really at capacity. How much of their time is actually going to billing work? Because oftentimes the issue is that you have attorneys doing paralegal work and you have paralegals doing legal assistant work. So a lot of times you don't necessarily need to hire a new paralegal or a new associate right away. A lot of times your key team members just need some type of assistance. And we live in a digital age, so we can hire virtual assistants, right? The day and age of paying an overpaid secretary are behind us. All right, so we're going to talk about the 50-30-20 rule, which coincides with my mindset, eat dessert first. Does anyone in here like to eat dessert first? Okay, so we have a few people. We're going to be good friends, okay? I mean that literally and figuratively. So yes, I like to have my cheesecake before my dinner. I'll tell you why sometime over drinks. But in the terms of running a business, I, as the owner of the business, work full-time in the business, okay? I'm doing at least 160 hours a month, at least 40 hours a week. So I should be paid just like if I were working a job, I would get paid. And oftentimes the owners of firms don't think that way. They pay themselves last. They pay themselves if there's something left over. But I'm here to tell you today, eat dessert first. So repeat after me, eat dessert first. Eat dessert first. Okay, this time say it like you mean it. Eat dessert first. Eat dessert first. Exactly. So we are going to make sure that as we're doing our budgets, we put our owner's salary in the budget because that is a non-negotiable, okay? 50% will go to operations, 30% owner's compensation and taxes, and set aside about 20% for growth and profit reserves. Again, 50% operations, 30% owner compensation and taxes, and 20% growth and profit reserves. And for those who are feeling guilty for paying yourself, think about it. Most of the clients that came in because of you, right? And you might not be doing all of the work from beginning to end, but you are making sure that the process is moving along, right? And you're serving as a senior to help the team, right? So you deserve to get paid. You deserve to eat dessert first. Now, if you're a contingency-based firm, this can be a little different. So you want to make sure that you're reserving 30 to 35% of your profits in high revenue months. Make sure that you're tracking your major case sources using your CLE reports. And delay your fixed expenses. Don't automatically just say, I'm going to buy this new building or I'm going to hire 5 people just because you had one good month. Try to get in the habit of saving 6 to 12 months in a savings account to cover you in those low periods. And in the guides that I'm going to give you later, we'll have a guide specifically for fixed contingency and a different one for hourly practices. So just because you got $1 million settlement, do not buy that Benz truck, okay? Now, let's talk about cash flow, because oftentimes people think that cash flow and profit are the same thing, and they're not. Profit is an accounting result, while cash flow is about timing. The profit figure on your financial statement doesn't care whether you actually collected your fees or not. It only reflects what you earned, not necessarily what's in your bank account today. So these are different reasons as to why cash flow and profits might not be in alignment. Delayed client payments. You're billing hourly, but it takes clients 30 to 60 to 90 days even to pay. One of the solutions, don't just bill once a month or once a quarter. If you only bill once every 90 days, you can't expect to get paid the next week, let's be honest. So get in the habit of billing at least twice a month if you're hourly practice. I like to say weekly, but baby steps, okay? Oftentimes, especially in contingency practices, you're front-loading expenses. You have to pay experts, filing fees, big marketing up front, and you don't really see the ROI until the case settles. So front-loading expenses can also create a discrepancy between cash flow and profit. Another one is not having a cash reserve. Many firms run on what comes in month to month to cover this month's bill, but if one check is late, everything is at risk. Then we have a timing problem. So if you have a lot of expected payments coming next week, but payroll is due Friday, we didn't plan accordingly for our fixed expenses, you'll have issues. So in addition to planning your income and expenses, also make sure there's a cash flow projection in that budgeting process. Other things such as loan payments, credit card payments, those types of things can create a discrepancy in cash flow. Let's talk about taxes. By a show of hands or show of blinks, how many people have to pay taxes in April when they get their tax return and tax bill from their CPA? You're not making quarterly estimated tax payments. Okay, I'm seeing a lot of blinks, not a lot of hands, but a lot of blinks. So you want to have a tax reserve account, okay? From by 50, 20, 30, we already talked about setting this aside. You definitely want to have that tax reserve account and put money from every dollar that you earned into that account. So your tax bill is never a surprise because you're talking to your CPA every quarter and they're helping you with calculating what that amount is. And as you're shopping for a CPA, you should be checking in to make sure that that's a service that they provide, that you can talk to them every quarter so that you're not paying a large tax bill plus interest and penalties in April and hindering your cash flow. Another tool that you can use to help with cash flow is automating your payments. Make sure that if you do this, though, you have this as a part of your agreement, okay? But a lot of times when people are working with lawyers, the situation that they're working with a lawyer on might not be the best situation. So the psychology behind them paying their bill to their lawyer is not a positive psychology. So you can remove all of the feelings just by setting them up on auto pay. Also, making sure that you have money set aside in an emergency fund will greatly help you as it pertains to cash flow. Now, some practices have irregular income. Some are higher in certain seasons than others. But if you have that cash savings, then you as the owner will always be able to eat dessert first. You'll always be able to pay yourself first. You should also be able to set a fixed owner's draw. So you as the owner of the company, if you create a profitable company, not only do you deserve a salary, but you also deserve profit distributions. Set this on a schedule so that at a minimum, you get a certain amount of draw every month or every quarter. It's up to you. Now, here is a QR code that you'll want to scan so that you can get all the resources. I'll leave this up for about 1 minute. And the great thing about this is that you'll be able to use your notes that you all took. You'll be able to look at the numbers from the past 2 to 3 years. And if you're on QuickBooks, it's very easy to pull your profit and loss statement and export that to Excel and use that as a benchmark for creating your next budget. Ideally, you'll do a budget for a whole year. However, if you're new, I recommend doing it for at least 1 quarter at a time. And we have plenty of time now to properly plan for first quarter of 2026. Everyone have the resources? Wonderful. Now, I'm going to define some terms just in case some of the terms I use went over someone's head. So, gross revenue. This is the total amount that you billed and collected before expenses. This matters because it serves as your top line indicator of overall growth, but it also should be considered alongside profitability, because if your gross revenue goes up $500,000, but you're then showing a net loss, was it worth it? If your gross revenue goes up $500,000, but you went from working 40 hours a week to 80 hours a week, and your therapist is saying that they can't work with you anymore because you are just too much for them, was it worth it? Next term is net profit margin. So this will be your profit divided by your revenue. So profit is income minus expenses. We take that number divided by revenue. That gives us our net profit margin. Remember earlier when I said you want to have a firm that has between 20 and 35% net profit margin? This will help you figure out where you are as it pertains to that. Then we have our average case value. Remember, when I started this presentation and I talked about revenue, I strategically planned how many new clients we needed based off of our average case value or average client value. This makes it so much easier to rather just have a number of dollars, create a number of clients or matters that we need. It makes it more realistic. And so your average case or average client value will be the amount of matters or amount of clients divided by your total revenue. Oh wait, sorry, other way around. Revenue divided by the number of cases, that'll give you your average client value. Now, client acquisition cost. This will be your marketing spend, total marketing spend divided by new clients retained during that period. So if your total marketing spend was $100,000 and you retained 10 new clients, what is your client acquisition cost? Okay, I'll give it again. Total marketing spend, $100,000, and you retain 10 new clients. What is your client acquisition cost? All right, there we go, $10,000. This is important because this gives you insight into the true cost of bringing in new clients. So a lot of people like to do a lot of ego-driven marketing. They like to do the billboards, the radio. Now, I'm not saying that's not good marketing. However, a lot of times, some people don't need it. And they like to do it because they want, to be out there, right? Now, at the end of the day, if you're spending all of this money on radio and you're not getting any clients from the radio, then is it worth it? No. Or let's say it costs an average of $10,000 a month to be on the radio, and the average case value that you get from the radio is only $8,333.33, and you get one of those a month. I know there's a personal injury attorney in here I just triggered, and it happens, right? But calculating this number will help you make data-driven decisions as to what kind of marketing you invest in. Then we have our utilization rate. This one is very important, and this one is the least favorite for law firm owners to track. And this is the billable hours divided by total hours worked. This matters because it measures efficiency. This is why I say, whether you're flat fee, contingency, or hourly, you should still track time, because it helps you measure productivity, efficiency. It even helps you when it comes to paying out bonuses. Everybody likes bonuses, right? Employees do too. But if we have lawyer A that's working 2,000 hours, and lawyer B that's working 2,000 hours, and lawyer A, even though they're working 2,000 hours, they only did about 1,500 billable hours or client work hours, while lawyer B spent 1,950. You have to look at, why is there a discrepancy? Does lawyer A need an assistant, or are they just wasting your time and taking naps during the day? Since people started working from home, let's be real, some people got lazy. And tracking time and tracking our utilization rate will help you in determining if your employees are actually efficient. And I know some of you, somebody here today has an employee that you want to fire. Just blink twice if that's you, okay? Now, you don't have the data to fire that person. You just know in your heart that this person is wasting your time and money. But once you start tracking time and getting that utilization rate, this will help with your decision to let that person go and bring in someone that's actually dedicated to helping you reach new heights and catch more flights. Every month, you should have a monthly financial review process. All of your accounts should be reconciled. And for those who have a trust account, in addition to the regular reconciliation that your accountant does in QuickBooks, there should be a three-way reconciliation. By a show of hands, how many people in here use an IOLTA account and do their own billing? Raise them high, keep them high. Now, of you that have your hands up, how many of you are having a talk with your accountant every month where they're telling you trust account discrepancies? Okay, well, something's not right, because if you're doing your billing, I'm telling you, there's some discrepancies, okay? I see it all the time. It might even be you meant to put $10 and it's $100. And if your accountant is not detail-oriented, where they make sure that your IOLTA account is balanced into the penny, you are not in compliance. And you are putting your license at risk, and I don't want that to happen. So remember, in addition to a regular reconciliation, you need a three-way reconciliation. You should also have a report that compares your budgeted numbers to your actual numbers. Anything that has a variance over 10% should be investigated. If you said that you would make $100,000 in December and you only made $83,000, we need to figure out why the shortfall. Was the goal incorrect, or did we not do what we needed to do for the plan to make that amount of money? Then, every quarter, you should be adjusting based off your trends, not emotions. You hear me? I know some of you quick to fire somebody. You are quick to fire that marketing company, and you only gave them 30 days. Go based off of the actual trends, measuring ROI, not your feelings. You should treat your monthly financial review like a court hearing, justifying every figure. If you can't explain it, you can't control it. Now, creating financial transparency, it's not about giving everyone in the firm access to your books. It's about creating a culture where key decision makers have clear, timely, and accurate information, and where leaders can operate with real numbers instead of assumptions. They can make better choices, move faster, and avoid costly surprises. Oftentimes, lawyers are hesitant to share certain numbers with their leadership team. But if you actually have a leadership team that you trust, which you should, and they're dedicated to the mission and vision of the company, they will stand behind you and support you in reaching financial goals, because they understand that reaching financial goals for the firm is not only good for the firm, it's good for themselves. It creates job security, possibly bonuses, and it's good for the community that you serve. Now, as you are working with your leadership team and you're looking at making decisions with different vendors and hiring and marketing, being transparent with certain numbers helps them make those decisions faster. How many times has it taken someone here over 90 days to make a decision if they need to hire somebody or work with a certain company because they're just waiting to fill it out? Raise your hand if that's ever happened to you or someone in your company. Oftentimes. That's why I want you all to get in the habit of taking a team-based approach as it pertains to making these key decisions. So your firm administrator, don't feel all the pressure yourself to do all the demos with all the softwares. Get your firm administrator involved in the process. Get your lead associate or your senior associate to also be a part of the process, especially if you are focused more into business development and they're dealing with certain systems day to day. they will be honest in telling you what will work best for them. Because you as the owner, you're thinking cost and they're thinking efficiency. So by working together, you can meet in the middle. I love a dashboard, okay? I love a good dashboard. And financial dashboards actually help you as far as having those numbers visible. So there are dashboards that you can create to see those numbers, those key performance indicators, such as your revenue to date, trust account balances, average client value, and utilization rate. This makes it easy versus having to go through a bunch of different reports. Have a dashboard where you can see these numbers every month. And use your staff members to help you set budgeting goals. So for me, we have different departments in our firm, and my operations manager and senior accountants, they are clear as to, they know what everyone's getting paid. I make it pretty straightforward. We don't even negotiate, okay? We are very clear. When you come in, you get paid this, and if you keep working good, you get a bump, right? So I'm very transparent with that, and they're able to, because they're leading the teams, help us stay within a certain labor percentage and we're not going over, okay? It's helped me tremendously because as an owner, we have so many different things to think about, but as a leader in your organization, they are laser focused on making sure that that department or that group is efficient, and they can help you along this process. You should also be documenting and reviewing your financial policies annually. So looking at billing protocols, expense approval thresholds, reserve account requirements. You should have these policies in your firm and review them annually. And the great thing is that you can use modern technology to help you with this. With CLE, if you're doing your billing right, you can actually do your trust reconciliation in the program. CLE also provides you with real-time profitability reports on different practice areas. And if your accounting system is synced, then you can oftentimes figure out different gaps, which are oftentimes caused by accounts receivable. You can see what you earned versus what you collected. All right, I have some time for questions. What questions do we have? Who here feels that they are super prepared to do their budget? Nobody? Oh, a few people. Okay, all right.
Yeah.
We have a question in the back.
Yeah, here we go.
Hi, thank you very much for this presentation, very educational. You were talking about putting yourself on salary. If you're a solo, does that mean you recommend setting yourself up as an LLC or some other corporate entity to have a salary?
Well, I won't talk to the legality of that, but from a business management and accounting standpoint, I oftentimes advise my clients that are solos to still pay yourself a salary. Why not? You're working, right? So as you are working, we want to make sure that you're paying yourself a reasonable compensation, meaning this. Let's say you're a solo business attorney and you live in Washington, D.C., and you go on Indeed and you see all the jobs paying business attorneys are $100,000. Why would you not pay yourself a salary of $100,000? When we put ourselves on salary, we're holding the business accountable to create the results that pay us a reasonable compensation. And we're eating dessert. That's right. We have a question back here.
So I'm one of the guilty ones that has never made a budget. So for someone starting out, how detailed do you get on your budget? You do just categories? Do you do, electric, internet, all of that, or do you do more categories like marketing? What do you recommend?
Let me make sure I understood the question correctly. You said brand new firm?
No, just brand new to budgeting.
How long have you been operating?
A long time.
Oh, okay. Well, you're brand new to budgeting.
Yes.
Okay, got it. So to make it easy for you, are you using QuickBooks?
Yes.
Okay, so what I want you to do is go in your QuickBooks, go to reports, standard reports. There's a profit and loss report. You can pull that profit and loss report for the whole year, export it to Excel. Then you can also pull that report for the first quarter. If you're planning for the first quarter, also pull it for the first quarter of 2024 and 2023, so you have some data to compare it to. So now you have your different line items to which you need to budget for. And you would know if there are other categories that aren't mentioned there. Does that help you?
It does. Thank you.
Absolutely.
Hi, good afternoon. We have multiple practice areas in our firm, contingency, flat fee, and hourly. Does the 50-30-20 rule still apply when we have those different fee structures?
That's a great question. Yes. And you can
Okay.
figure out a way to do it.
Okay.
Now, I'll give you another gem, okay? For people that have the different practice areas, luckily for you in my freebies, you got 3 different worksheets. So you can plan a certain budget for each practice area, and then your fixed expenses are shared expenses. That's going to be fixed regardless, right? So that part is easy. But your variable expenses and your revenue per practice area, those are going to be specific. And then you could combine those into a bigger budget. So a consolidated budget. So at the end of the year, when you compare your budgeted to actual, and let's say that you see that you made a lot less revenue than anticipated, you can look at that and even compare by practice area and see if maybe one area, either the flat or the contingency or the hourly, is not really pulling their weight. And from there, you can make a data-driven decision. Do we need to up the marketing so that we can get more of these clients in this area that is not pulling its weight? Do we need to cut it? Maybe we need to outsource it, or maybe we need to allocate less expenses to it. Does that help you? Great. Okay.
Again, fantastic presentation. Thank you.
Thank you.
With the 50-30-20 allocation rule, just following up on that, is that from every new dollar that comes in the door, or is that an allocation of something else?
It's an allocation of every new dollar that comes in the door. I'm going to go back to it for you guys. Yes, fees earned. We're not going based off of settlement amounts. Don't you guys hate that when firms only talk about the settlements? I'm always trying to do the math to see, okay, so 33 and a third of that to, count the revenue. But yeah, you want to look at this based off of the revenue, gross revenue. And the other complex part of this is we're looking at revenue collected. It's very hard to do this if you have a collections issue and you have a lot of money tied up in accounts receivable. But in the event that you do have a lot of money tied up in accounts receivable, that helps you to really get serious about the collection efforts. Do you make changes on how you engage clients? Are you going to hire a dedicated person? Are you going to implement auto pay? These are various different decisions that you have to think about and consider when you have collection problems. We have time for some more questions. I see we have one over here. You know what might help? If you all want to come form a line at this microphone and that microphone over here, we can, that way, he's not having to walk all the way back and forth. Don't be scared to stand up and walk over.
Hi, I have two questions.
Okay.
The first is mentioned there's a worksheet for a budget. Do you have a worksheet for a budget for a firm that's just starting out and maybe has like a different allocation because of, they're new and they don't really have any data? Or do you have other resources for kind of new firms in that sense?
What area of law?
Just like an hourly.
Okay, so the question is, do I have a worksheet for a firm that just started out? Not necessarily. However, the worksheet can still be very beneficial to you in pointing out what your fixed expenses are, what your variable expenses are, incorporating what you want your salary to be and your profit margin to be. It can still help you with that.
Mm-hmm. And then my second question is, do you have any books, like suggestions for people who are not financially minded to get a better sense of this whole kind of extra world that they have to deal with?
Absolutely. So the question was, do I have any book suggestions? The first one is called Raise the Bar. That was written by a phenomenal author. His name is Jaden Doye. Some of you may know him. Then there's Profit First by Mike Michalowicz. You know what? If you send me a message on Instagram at The Great Jaden, I have a list on my Audible that are just not coming to my mind, but I'll send them over to you. I'm an audiobook type of person, okay? What other questions do we have?
Hey, Jaden, I have one from the virtual session
Oh,
right back
yes,
here.
virtual questions.
Yes.
Let's do it.
This is from Daniel. How do we calculate utilization rate when we work with flat fees and we use non-billable hours instead of billable hours?
That's a great question. How do you calculate utilization when you do flat fee and you don't charge by the hour? Well, I'll tell you exactly what I do. Let's say I owned ABC Law Firm, okay? In Clio, I would put, or whatever case management system you're using, I would put ABC Law Firm as a client. And anytime someone is either doing admin, marketing, business development for the firm, they are to put that time, they're going to put that time into the firm on their timesheet. We're logging all work hours, okay? And then when they're working on client matters, of course, they're going to put that time to the client matter. We're not using that time to bill. We're using that time for our KPIs and measuring productivity and things of that nature. So at the end of a quarter, at the end of the week, at the end of the month, whatever the case may be, in my firm, I get a time report from everyone every Monday. I can see how many total hours they have versus how many hours went into actual billable, of course we're using air quotes, but billable work. That will help you determine two things. One, if they're putting enough time into the client matters, and two, it also helps you figure out if people are spending too much time on a matter. So for instance, an estate plan, typical estate plan, in total that should take about how many hours? Katie, how many hours? Okay, so 5 hours, right? So in a flat fee environment, we have to, we're changing our mindset and we're no longer thinking about the billable hour rat race, and we're moving into efficiency, right? So I like to put time budgets on all these matters. So if an estate plan should take 5 hours in total, right? Of those 5 hours, let's just say hypothetically, 3 out of the 5 are earmarked for an attorney. And you see that you have an attorney that for some odd reason has coded 7 hours to estate plan time and time again, then you have to ask yourself and ask the person, what's the problem here? Are you lying about your time? Or are you just moving really slow? What's the issue here? Do you need more training on the subject matter, or do you need more training on software? And as you are looking at these numbers every month, this helps you to then have a feedback loop with your employees. By a show of hands, how many people here are doing staff evaluations every 90 days? Oh my God. Next year, everybody's hand should be raised. Let me explain to you why you have to do evaluations every 90 days. You're keeping that feedback loop going. If you're doing it every 90 days, someone could only be slacking off for but so long. It gives you the opportunity to give praise to someone who may not be used to getting praise, and it gives you the opportunity to help figure out what your team needs to be more efficient. Okay? So 90-day evaluations for your team members. I don't care what type of practice area you're doing, everybody should be doing it. Do we have more virtual questions?
We've got time for one more, Jamie.
Okay,
Yeah.
time for one more question. Oh, yes, at the mic.
Yeah, I'm curious, at what level of revenue and size of a law firm do you see most firms where they can justify bringing in a fractional CFO to really get sophisticated with this stuff, and then eventually a full-time CFO? Just kind of, is there a range or tiers that you see that's the most common?
That's a great question. Just to make sure I understand it, you're asking at what revenue threshold do I see people where they're able to bring in a fractional CFO versus a full-time CFO?
Yeah, really the fractional, like when is it time for a fractional? And you can also add, 30 employees to that metric or whatever, however, between people and complexity versus revenue. And
Gotcha. So I'll preface this answer with saying there is a difference. The answer will be different based off of the practice area, right? Because $2 million in revenue for a PI firm looks very different than $2 million in revenue for a family law firm, right? If we're looking at average client value of $25,000 versus $12,000, that's very different. And in addition to that, every CFO is different, right? We have the ChatGPT CFOs. We have the people that, worked for a big company back in the day, and now their retirement strategy is just to be a CFO and advise. And everyone's pricing strategy is a little different. But I think at about $250 annually, you can have an outsourced CFO. You can find an outsourced CFO that can fit your budget. And then as far as hiring full-time, that changes dramatically depending on the practice area. But in my experience, what I've usually seen is usually around a few million is when they start to bring someone full-time. All right. Well, that's my time. I hope you all got value from this presentation.